So today we will talk about the initial public offering. Why we are talking about the initial public offering? Because in the recent there are the some initial public offering, means the IPO has been launched. If you talk about the firstly the largest ever IPO launched by the Paytm and recently by the Nykaa, and further about the government company popularly known as the Life Insurance Corporation of India, means the LIC, and that's why we are going to talk about the LIC. So let's talk about why in news the mega initial public offering. Remember that the IPO, this is the short form and full form of the IPO is the initial public offering. IPO of the Life Corporation India are coming after the recently launched by the Paytm and the Nykaa, as you know very well. So remember this point. So before we have to look, we need to understand what is an IPO and why there is a need of an IPO. Means why actually IPO is needed in stock market, or either by the company or either by the government company or private company. So let's talk about. If we talk about what is an IPO, remember that an IPO is the process by which a privately held company or a company owned by the government such as LIC raise funds by offering shares to the public or to the new investor. Now what is an IPO? So recently when a company launched, suppose that there is any startup like let's say the LIC itself. So when there are the families or friends or some kind of actually that is the whatever the saving FD account or family friends person then started the company. Like if you start any company, so whatever is the any saving belong to you, or either you take loan or either you take savings from the friends or family, then you take a startup. So after the going and further going by the angel investor, and then there are the further investment by the private equity, then it comes the IPO. So when IPO is launched, this is the way actually the retail investor or qualified institutional buyer actually put the money in that company. So this is what is known as the IPO. So initial, because it initially first time launched in the share market, that's why it is known as the initial public offering, and directly by the company, either by the private company or either by the government company. So this is known as the initial public offering. So remember that. So it is the process by the actually to raise funds. So raise funds. So remember that this is the very key point, is the raise funds by the company to share the public to offering shares to the public or the new investor. So remember that. If we talk about following IPO, the company is listed on the stock market. So remember that. If we talk about why an IPO, as I have already told you, when you launch a startup, you need the promoter, and that promoter at the initial stage work as the savings. So whatever savings belong to you, that you invest in that startup. Either you take from the fixed deposit or the loan. If you have any fixed deposit, you take out the fixed deposit and then launch in a startup. If you either you take any loan from the bank, or if you have friends and family have some money, then you took money from them and then launch a startup. This is the first stage of a startup or a company while launching. So remember that. If you talk about another is the angel investor. Who are the angel investor? Basically those who have the more money from this is known as the angel investor, who actually put a stake in your company. After that, at the third stage, what happened? There are the venture capital and the private equity firm come to that company, either the government company or the private company. So remember that. After that, there is the big IPO came, and this IPO actually listed your company on the stock market. So if you talk about why an IPO, or basically what are the advantages and benefits of an initial public offering, then remember that basically it lead to the expansion of the company. How it lead to the expansion of the company? Obviously, if you are a fund or if you are raising the funding by offering shares to the public, means now you have money. So when you have money, then you can expand the branches of your company, and that lead to the expansion of the company. So remember that. If you talk about to reduce the debt of company, how it lead to the reduce to debt to company? Basically, if you have money, then you have taken either you have taken any loan from the bank, then you can pay them a certain percentage to debt to the debt. So remember that. If we talk about exit to the previous investor, how exit to the previous investor? Because now you have money by which is offering by the public to you. So whatever is the previous investors are there which is invested in your company, now they have the full power to exit from your company, because now the public offering you money or you are taking money from the public. So remember that. If we talk about another is the bring more transparency about the company, because if you are listing any company in the stock market, you have to give some extra and even the confidential report about the company to the public. So remember that, which will lead to the more transparency about the company. So remember that this is the most advantages and benefits of an IPO. Remember that. If you talk about which company can launch an IPO, remember that. If we talk about all companies can launch, yes, all companies can launch, but there are these certain rules. If you are qualifying that rules, then you can launch an IPO, otherwise not. So remember that. If you talk about what is that, this is rules actually set by the Security Exchange Board of India. Remember that Security Exchange Board of India, which handle all the investment, stock market, National Stock Exchange, Bombay Stock Exchange. So what are the main rules? If you talk about, the company must have a net tangible asset. Remember that. The company must have a net tangible asset of at least 3 crore and net worth of Rs 1 crore in last 3 years. Now what do you mean by net tangible asset? Remember that there are some liabilities. There are some liabilities. Exclude that liabilities. There are some tangible assets lies with you. That must be at least of 3 crore and your net worth Rs 1 crore in the last 3 years. So remember that. Another criteria, if you talk about minimum average pre-tax profit, remember that. What do you mean by pre-tax profit? If you talk about profit that is not actually taxed, so that is known as the pre-tax profit of at least the 15 crore in last 3 of the preceding 5 years. So remember that. This is the main 2 criteria. Obviously there are the another rules related to the which company can launch an IPO, but these 2 are significant. Now the main question arises actually, who can invest in an initial public offering or IPO? If you talk about, basically there are the 3 criteria. So remember that. Firstly are the qualified institutional buyers and another is the qualified institutional investor. So remember that this investor or buyers are the same. Remember that. If you talk about the qualified institutional buyers, means there should be an institution who can invest. So remember that, not individual. Only institution can invest, but not individual comes under the qualified institutional investor. Like the all scheduled commercial bank, mutual fund, foreign portfolio investor registered with the Security and Exchange Board of India, means SEBI. If you talk about another is the development finance institution, insurance company. So remember that these are the investor, which are the institutional investor known as the qualified institutional investor, but individual cannot invest. So remember that individual not comes under the qualified institutional buyer. So remember that. If you talk about, there are another qualification, that is the non-institutional investor, popularly known as the non-resident Indian, either any companies or trust, but it should be more than 2 lakh, means the criteria is the 2 lakh. Those who are upper than the 2 lakh is comes under the non-institutional investor. So remember that. If you talk about another is the retail investor, like individual, I am and you are who are watching the video. So remember is the retail investor who actually invest less than 2 lakh is known as the retail investor, as an individual who can invest in an IPO. So these are the 3 criteria as people actually invest in an IPO. So remember that. If you talk about another question arises, where actually do the proceeds of an IPO go? Means whatever is the raise funding actually coming from the public, actually where actually the money is going. So remember that. So there are the 2 criteria. Firstly is the issue for the fresh capital. So remember that. Like if you talk about, if company want to raise the fresh capital for the development of the company, then whatever is the coming from the shares actually is directly goes to the company for the growth of the company, for the expansion or for the raising the fixed capital of the company. But another is basically for the offer for sale. Remember that. So now here is for the sale. So actually it not goes to the company. Remember that, because there are some institutional investors, obviously there are some retail investors. So whatever is the profit coming from the offer for sale, means sell by the company, either the 5% stake, 10% stake, 15% stake, or the whole company, all goes to the investor, not actually the company. Remember that. If we talk about in case of LIC, it is not going to the LIC but to the government of India, because government of India is the losing the stake. So remember that. And it is basically for the offer for sale. So remember that. So now in an IPO, if you talk about, there are the very important document. That document is known as the basically the red herring prospectus, which consists basically the details of the company, all details of the company. Remember that. if you talk about, and basically even the sensitive information about the company if you talk about, because you have to be more and more transparent and accountable to the people actually who are purchasing your shares or purchasing the shares of the company. So that is why that is known as the red herring prospectus, and this is submitted to the Security and Exchange of Board of India, which actually verifies it. Remember that. So consists of company details about the company. Remember that. If you talk about the example, then business and promoter details. What is the competitive advantage if you talk about, capital structure if you talk about, now the future business plans, what is the expansion growth and who are the actually and what is the competitive advantage you have. Now the past financial data, which consists of basically either you have taken any loan from any bank, or either there are what are the profit and what are the loss in the past year. Now the most important part if you talk about the fixing of the share price, actually how prices of share actually fixed. So remember that the per share price of the public issue, actually the share is fixed by the issuer, means whatever the company of the issuer in consultation with the merchant banker. Who are the merchant banker? Which actually helps the company to issue a share in the institutional market, either the National Stock Exchange and the Bombay Exchange. That is known as the basically the merchant banker. So remember that if you talk about. Now remember that one of the very important point if you talk about, SEBI has no role in fixing the price. What is the main role of SEBI? Basically to give the regulatory clarification to the company. So remember that this is the job of the SEBI, and SEBI has no role in the price fixation. So remember that. So this is all about the initial public offering. What you need to remember, and if you talk about the summary of this video, then remember that initial public offering is a way to raise fund by issuing a share in the institutional market, basically the Bombay Stock Exchange and the National Stock Exchange, either by the private company or by the public company holded by the government of India or government of state. So remember that. If we talk about who can invest, very important, basically the qualified institutional buyer means all the investor whoever want to invest, but obviously there are the some categories. There are the institution, retail investor, and obviously the non-institutional investor, but whoever has the amount, either they can purchase this share. So remember that. Another important point if you talk about what are the advantages, why actually IPO is launched. The first is the expansion of the company if you talk about, to repay the debt, to basically lead to the more and more transparency about the company and lead to the more transparency in the eyes of the public, so they can invest in the company. So remember that. Obviously there are the some expertise is required to issue or to purchase the shares of the company while looking the various criteria. That is basically the expertise part, and like Warren Buffett do, and there are the some, and obviously the retail investor actually do. So but there are the some expertise in needed, or either you can hire an expert. So remember that. So this is all about the initial public offering. Thank you guys. Hope you like this video.